Hello and welcome to Game of Trades. My name is Peter, and today we're going to take a look at the Nasdaq 100. There are some big developments happening right now on the charts that you should be looking at. So we're going to cover all that. We're going to take a look at the technical picture of what's happening in the tech sector. We're then going to take a quick look at the S&P 500. Can it break through these resistance levels and head into a larger rally over the coming weeks, or is this move going to fail and head back into these levels of support? And finally, we're going to take a look at the dollar index, the US dollar index that's been rallying very aggressively, but that's starting to sell off today. So we're going to take a look at that, what it means for the markets, what it means for other opportunities outside the stock market. So without further ado, let's get right into it. So starting off with the Nasdaq 100, let's take a look at what's happening here. I want to first highlight the levels that we were looking at over the past few videos. The first thing we were looking at is this downtrend line right here. So we had that trend line capturing the top of that rally here, and now we've had two consecutive reactions. And now we're starting to break out. That's a very significant development. And the second thing that we were looking at is this level right here, the 12,740 level right here, that was acting as a huge level of support right here. You've got reactions all the way through. You've got one dip, back test, dip, and then snap back above here, validating that as support. And then you've got two more reactions holding this level as support. So this is clear buying pressure building, and a break of resistance is the supply giving in. And now we're breaking not only this downtrend line resistance, but also this level of resistance from that price channel right there that we're starting to break through. So we'll see how this situation develops throughout the next few weeks. So far, it's looking bullish. Can we fail at this resistance right here and head in for a back test? Absolutely. Something else to pay attention to on this chart, let's head to the daily chart, and we can put the 100-day moving average. This is something that we looked at over the past couple of videos, and you can see how beautiful this looks. You've got a nice breakdown, a test of that moving average, a snapback above, and then you have the price action consolidate just above that moving average before breaking out, and that's a beautiful candle. Again, we'll see how this candle closes, but if we print a nice green candle through resistance like that, that's a check mark for the bulls. It's good for anyone who's holding the tech sector right now. By the way, if you're enjoying this video, make sure to drop a like on the video. It really does help our videos out so much. If you've got any comments, make sure to drop them down below. We do read all the comments and try to reply to as many as we can. The comment section is open for debate, and we've got quite a lot of interesting opinions. So I do recommend you guys go through the comments and read them with an open mind, because it's only through discussing and debating that you're going to be able to fully understand both sides of all trades. And that's what makes a trader successful, knowing both the reward and the risk to every entry. So now we've taken a look at the Nasdaq 100. I want to move on to the tech sector divided by the S&P 500 and quickly take a look at that. That's what this chart is right here. Now let me just quickly remind you of the weekly chart, and let's zoom out right here. This is the .com bubble where tech strongly outperformed the S&P 500. And you had that reversal off that resistance level at 3.3. And let's zoom into what's happening here. You had a breakout during the health crisis, backtest resumption, and now we're testing it again. And we're closely looking at that. Everybody should be closely looking at that, because this is the most important thing happening on the stock market. If we break down here, that's the end of the bull market. If we hold this and resume, this is actually a great buying opportunity for stocks. So you should be looking at what's happening here. So if we take a look at what's happening on the daily chart, we're currently printing a nice green candle on this chart, telling you that the tech sector held this support, which corresponds to that .com bubble top. So this is a very significant level of support, and this is a very significant level of resistance. So while this is a bullish development, right, that we're holding this as support, and it's a great place to be buying tech stocks if you're bullish on tech stocks. There's still not a whole lot to get excited about. We're not on a significant breakout just yet. There does seem to still be a lot of pressure on the tech sector, still making lower lows. So let's see if we can break back above this previous high and start making some higher highs here. And that would start to really look good for the Nasdaq 100 and the S&P 500. Because remember, right, even though this is a relative performance, when tech does well, the stock market rallies. So you want this ratio to be going up if you're bullish on the S&P 500. In fact, let's take a look at what's happening on the 8-hour chart of the S&P 500 right now. Still in a very bullish structure right now. We're still within this price channel, making higher highs and higher lows. And we're currently testing that all-time high with a nice little bullish structure here. That's a nice, strong, powerful leg up, a consolidation that we're starting to break out. So potentially we could see another leg up of similar magnitude to this one. That would give us a measured target of just under 4,100 points. Is that something that's possible? Absolutely. The short-term picture on the Nasdaq 100 is still looking very good. Now, that being said, if we take a look at the longer-term chart, this price channel here, we're still sandwiched. We're still consolidating just below that resistance. So although this is very bullish price action with this bull flag right here and another bull flag forming on the 8-hour chart, while this can lead to a breakout, we're still just below resistance. So from an objective technical analysis standpoint, we're just below resistance. That's a risky trade. So the S&P 500 is still high risk. We much prefer the Nasdaq 100 right now that's currently breaking out until we are able to clear that resistance. If we clear that resistance, that changes everything. So now let's take a look at the US dollar currency index. We're paying close attention to it. It's been rallying over the past few weeks, and a strong dollar is not good for the stock market. It's not good for precious metals, emerging markets. So we're very much paying attention to the US dollar. If this rally continues to form into a stronger trend, then that could actually put pressure on these asset classes over the next few months. So that's what we're trying to figure out right now. If you look at this chart, this is the daily chart. We are clearly in a downtrend on the dollar, right? The dollar's been trending down since the beginning of the health crisis. Trillions of dollars pumped into the economy, increasing the supply of dollars, bringing the relative value of the dollar compared to the euro down with those easy monetary policies. So we are in a broader downtrend, and within these downtrends, you do get counter trend rallies. So this is what we're still currently expecting, that this is a counter trend rally. But the question that we're trying to answer is, at what point does this morph from a counter trend rally to possibly a sustained rally for a longer term trend on the dollar? So we're going to take a look at that in two ways. First of all, the fib retracement. So we'll take the fib retracements from the top of this move all the way to the bottom right here. So we capture that entire downtrend, and you'll quickly notice that the 0.382 level corresponds to this resistance zone here that acted as support right here and acted as resistance right here. This is a strong level of resistance. So is that something that we should be looking at, that 0.382 level on the DXY, for a potential reversal? Perhaps. Right? This is a typical retracement level for counter trend rallies and counter trend corrections. So we would still be in a counter trend rally scenario if we test that level and reverse. Now, if we start breaking above that, that's starting to look like a sustained rally on the dollar. So that's the first answer to that question. And the second point that we want to make is using the 200-day moving average. And this actually corresponds to a comment that we had in the previous video that we made, where we looked at the dollar and somebody highlighted that we were starting to break that 200-day moving average. Is that something that we should be worried about? And the answer is yes, but not just yet. There are often moments on the DXY where you get brief dips above the 200-day moving average before reversing back down and continuing that downtrend. So that's something that we're paying attention to. If we get a reversal back down below that moving average, that signals much more downside on the DXY, undercutting these lows, continuing that downtrend. And we can take a look at the previous bear market to prove that point. This is the bear market on the US dollar that lasted from 2002 till 2008. And so here I've put the 200-day moving average, and you can see what happens during bear markets. You can have brief dips above before continuing the downtrend. Same thing here. 2 rallies above the 200-day moving average before continuing down. Same thing here. If we look at what happened in 2005, when you actually make a full breakout of the 200-day moving average, that's when you get into the sustained rally scenario that we had from 2004 till 2005. So that's definitely something that we're currently watching. We do not want the DXY to start breaking too much above that 93.4 point level, because that would start to look like a successful breakout above the 200-day moving average. Ideally, we want to see that reversal happen now. And is that something that's possible? We can zoom in to the 8-hour chart, and you can see we still have negative divergence between the price going up, testing that resistance level, and the MACD going down. So all that's missing for downside on the DXY is a breakdown below this price channel and even below that 92.7 point level. If we have that type of move, that would suggest much more downside for the dollar in the coming weeks and a resumption of that downtrend, and it could fuel higher highs for the stock market. Now, if you're interested in more content from us, you can check out gameoftrades.net. If you're interested in finding out more about our trading strategies on different asset classes and investment strategies, where we highlight our specific entries and exit points for the investments that we're actually bullish on for the long term, you can check out our free trial at gameoftrades.net. Now, that's about all I wanted to cover in this episode. If you enjoyed, make sure to drop a like and subscribe to the channel if you haven't already. In the meantime, good luck on your trading and see you next time. Now listen up, if you're already investing in cryptocurrencies, why aren't you investing in tax-free crypto? ITrustCapital is the only provider that allows you to invest in crypto assets within your retirement account. They allow you to not only buy Bitcoin, buy Ethereum, and others. They even have Chainlink coming soon. It's designed for beginners and experts alike. They give you 24/7 trading access and even have built-in institutional grade secure storage. You don't need to worry about creating private keys. If you open an ITrustCapital Roth IRA, it allows you to buy Bitcoin now, and when the asset grows over the next few years, you keep all the profits for yourself with no taxes. If you want to learn more, head to itrustcapital.com and you can request your free insider's guide now. This will teach you all about crypto retirement accounts and how you can invest tax-free.